Welcome to Retirement Talk. I'm Dan Benson here with John Maxon, and today our topic is going to be what to do with your money during a recession. I think this is a great topic for right now. It's relevant. A lot of people don't realize we've just experienced two recessions really in less than 2 years. There was a recession in 2020, the shortest on record. It lasted 2 whopping months, but still coded a recession. And then last year, many think we were in a recession. Many still think we weren't. John, were we or were we not in a recession in 2022? And then let's unpack what do people do when they are in a recession?
Well, the recession of 20 with COVID, having $4.1 trillion injected into the system, that certainly helped.
That helps,
things.
yeah.
That helped a little bit. Then we got that second stimulus, $1.9 trillion. I mean, that's like a huge amount of money. So, I'm almost 52 years old. I know a few things in life, and as long as I've walked this earth, the recession's always been defined by 2 negative quarters of GDP, which we did get last year. I think the numbers show we're in a recession, but amazingly enough, politicians on both sides play this game, came out and said, well, even though, this has always been the way it is, 2 negative quarters of GDP doesn't necessarily mean that it's a recession. I mean, a politician on either side would never say something controversial to get reelected because the midterms, that would never happen.
No.
But
Only speak the truth.
Food costs are way up, energy, that stuff's starting to come down, inflation all-time high, credit card debt all-time high, savings all-time low. Corporate earnings are certainly being compressed. We're starting to see more layoffs. A lot of good news. That's for the positivity today. Most of that lines up with recession, but I think that the important thing is, so I feel like we're in recession. I feel like we've been in one, and feel like that we're going to be in one for the first couple of quarters this year. But that doesn't mean there's no hope, because recessions are just part of markets and business cycles. It's not all gloom and doom, and there's some really important things you should be doing with your money in periods of time like this.
Well, and here's the reality. Does it really matter if we're in a recession or not, if the market's down 20% and we have significantly rising inflation? Does it really matter if we call it a recession? Is it still not a very difficult time in the economy? Is that not what we're trying to navigate here?
Yeah.
So it is. Call it a recession, don't call it a recession. When the market's down 20% and you have rising inflation, I think it's time to take heed to opportunities that are out there. So what can someone do during a recession? Well, typically in a recession, we're seeing job losses. We're also seeing the stock market going down. We experienced that in 2022. Now the question is, as an investor, what is it that you should be doing in the middle of a recession? Do we run? Do we hide? Do we, pull the covers over our head and wait till the bad dream goes away? Or are we able to keep our composure, not allow emotions to drive our investment decisions, and go back to the old adage of, when the market's down, buy low, right? When the market's going up is when you want to sell. Emotions have us do the opposite. So many times, John, when the market's going down, people just want to bail, don't they?
Yeah. Or they turn on their TV regardless of whatever channel you like, and you have a bunch of people that are being paid a bunch of money that know basically nothing, with a few exceptions, about finance and market cycles. And you talk about the market sold off pretty hard last year, but the market's forward-looking. So the market is pricing in what it believes is going to happen. And to your point, Dan, surveys indicate, Delbar, for example, is a leading research firm that studies almost nothing, has for decades, investor behavior. And what happens with investors is they don't buy low and sell high. That's what they want to think they do. And some people do. Most people, though, they buy high when they're feeling comfort, and they sell low when they're feeling pain, because it's really painful to get those statements that are down. And by the time the talking heads out there actually come out and say, oh my gosh, we're in recession, and in our view, the market will have already priced that in. It'll be in the beginning stages of actual recovery, and those initial early days of recovery are important to your long-term trend. A lot of people are going to miss them because they're too worried about somebody who knows nothing about finance giving them bad advice.
Well, and I would say know who you are and where you are before something happens. right? Nobody cares about risk when they're making money. Nobody questions the risk in their portfolio when all they see are positive gains. And then all of a sudden the market goes down and they start to question, well, why did I have so much risk, or I didn't realize that? The reality is, if you're in your accumulation years and you don't need to touch your investments for at least 5 to 10 years, every market downturn is an incredible opportunity that doesn't come around very often.
Nope.
I mean, good news is recessions don't happen very often. They don't happen every year. Most of the time, they might happen once a decade. Meaning, an opportunity like this only comes around maybe once every 10 years. And so as the market is going down, the best thing you can do is stay in, continue to buy, dollar cost average if you can. I have people that'll say, oh, my 401k was going down and I was putting in money and it was losing more, so I stopped doing that. That's stupid. Don't do that. Continue to invest in the down market to realize the averaging that's going to mathematically, it's proven, it's a fact. Buying into the down market is going to help recover and escalate the recovery much faster. Continue to buy. If you are 5 years or less to retirement, you should have already moved money off the table, a portion of that isn't subject to the market volatility, so you have a part to take income from. But again, the growth money, the part you're not counting on, continue to buy, stay invested, and don't sell into the downturn.
I can't believe you said stupid. Now that would get you in trouble. But that is stupid. Okay, so I said
That
it
hurt
too.
someone's feelings.
It's about, so if your feelings are hurt, that's okay. We'd rather you have money in your pocket instead of being stupid. That's just the way it is. And my other favorite thing, I have to just throw this out there during times like these. I saw one of these commercials the other day. This guy's on this amazing, farm. He's on horseback, and he's talking about, he puts all his money in gold coins. I mean, I'm sure nobody paid him any money to sit on a horse. Probably never ridden horses in his life. He's an old dude. How many old dudes do you see out there in horseback, running across, putting their money in gold? Okay, it's not Armageddon. It's not the end of the world. There's opportunities. The question is, do you know where to look for them?
Yeah.
Or are you going to listen to people who really just going to hurt you long term? Well, hey, listen. Hit our subscribe button below. We have a lot of great information here on our YouTube channel. And for more about us, visit retirementtalk.com.